Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. So let's update our current view on the euro currency. Well guys, you probably know that most of financial and commodities markets now are driven by mostly geopolitical events. I'm speaking about the Syria turmoil, and currently since market is just waits when some clarification here will appear whether United States will strike the Syria or not, and how it will happen. The reaction on the markets could be different because it mostly depends on what level of United States action in Syria market currently involves in the price, already includes in the price. So, and depending on how situation was tried to develop, the action could be different. So if for instance currently market already includes the potential strike on Syria, then probably the reaction could be opposite. But if the war and the first strike on Syria will take some unexpected shape and some unexpected surprising events appear in this conflict, then the price action could and something will appear that market hasn't included in the current price action, that could lead to the reaction that will lead to appreciation of the United States dollar and the growth on the gold market. We already see this. So this plunge yesterday was the announcing of the war action and the announcing of the using the force in the Syria by United States, and the gold market also has shown significant growth as the crude oil stocks plunge. So that, in fact, the geopolitical situation starts to impact on the markets. Well, my thought is that probably United States will apply the force and will use the force on the Syria, but they just can't, after the all rhetoric that wasn't announced in the previous days. United States probably already can't erase and rewind this, so they probably will have to apply some force there, but maybe they will limit it just by the rocket attack on the Syria. Maybe there will not be the extended using of the air force, and on the ground operation will hardly happen. But that, as you can see, that is the term of the uncertainty that is worrying the markets. Depending how deep the United States will stuck in the Syria, this will depend on whether markets change the direction or not. If this will be just a rocket attack, some rockets will be fired on the Syria and the conflict will be finished. That's the one story. But if United States plans some extended in time operation, that will really could shift the balance of the markets currently. That will definitely lead to the appreciation of the United States dollar. That will lead to the growth in the gold market and the crude oil. That's definitely will happen. The one thing that comes in my mind when I look at the programs when they were announcing of the United States, on the France, Great Britain concerning the attack on the Syria, was in reality, could the financial situation on the market, especially on the forex market, somehow be linked with this potential conflict? Because we see the strong appreciation of the euro that is not very welcome for Euro Union currently. And could this conflict be used for just reducing the United States euro dollar ratio, euro dollar exchange rate? That's the thought that has appeared in my mind, and I think, and why not? That is generally possible when some even light application by the United States on the Syria probably will lead to some appreciation in the United States dollar and some reducing of the euro currency rate in relation to the US dollar. Why that couldn't happen? And in general, we can't absolutely exclude this moment. Well, that's why it's very difficult to suggest and forecast any action currently, because you can see that mostly the geopolitical risks now are dominating on the markets, and nobody currently can predict in what scenario this potential war action could take. That's why, first of all, I would like to say a couple of words on the daily time frame. That is our patterns that suggest the downward action. Now we have the third day in a row when the market does not show the action according with the pattern. Now is the time to recall the three period rule. So if market does not show the action that is suggested by the pattern within the 3 trading sessions in a row, probably it's better to close the position. Also, here appears some sign of the bullish dynamic pressure. As market doesn't show the action to the downside, you see the market is forming the high lows while trend holds bearish. That is the potentially bullish pattern and suggests that probable upward action to the possible upward move on the market. That's why it's a bit risky to hold bearish position currently. So on the daily market, 2 major moments. First, the 3 period rule. Second, potential bullish dynamic pressure. That suggests that something is wrong with the bearish setup. So market does not show reaction, logical action with these patterns that have been formed on the previous week. But again, that is currently it's not purely the technical moment. Currently, the geopolitical factors just holds market tight, and that's why it's just an expectation, a period of expectation. That by this we could explain this really just small action. As you can see, market in fact forms within the whole week some inside sessions, because mostly action stands inside of these candles on the daily time frame. On the 4-hour time frame, we said that if market will show the failure breakout and will not start move according with this head and shoulders pattern, that could open the road for the butterfly. We have said that yesterday. Now, that was the task for you to recognize this butterfly. I have written this in the daily update. Try to recognize this butterfly by yourself. I hope you have done this. But for some case, I just draw this butterfly here as well. That is the potential butterfly that could happen. That butterfly stands in agreement with the potential bullish scenario that I have just discussed on the daily time frame. I mean that if market will really fail to continue move lower and the bullish dynamic pressure will work, that could take the shape of the butterfly on the intraday charts. The first target of the butterfly is 134.93. We could call it probably 134 area. It's 127 extension. Next butterfly target is 135.44. So we can see really significant action could follow by this pattern. Because currently on the 4-hour time frame we see this not natural action, because market, if even we exclude this Fed speech, this piercing of this neckline, suppose that it doesn't exist. Here yesterday we have normal development that we have suggested, and we said yesterday put your stop to the break-even, because that is the logical action with the head and shoulders, but that one is not logical. That's why we said if market will show some unlogical and unexpected action, it could mean the challenge of the bearish setup, and this could lead to the vanish of the bearish setup, because this action is not reasonable for the overall development of the head and shoulders pattern. Normally market should not, after the breakout of the neckline line shows the returning right back and holding above right around the right shoulder again. That's not normal. That's why I have some warnings about the potential bearish development, and I think that it's better to close the shorts. What could be done in general? So currently we have a bit tricky situation, because we have potentially this pattern, that invalidation point is right here. So if market will move lower than this area, butterfly will be erased, and potentially we still have the bearish stop grabber that is still valid. A 3-period rule tells us that probably better do not make a deal with it, but still it's valid. So what if you still would like to trade in the current environment? you try to take your position as close to the invalidation point as possible. So if you're bearish and would like to enter short, try to take the position as closer to invalidation point of this bearish stop grabber as possible, because it will just minimize your risk and will let you to put your stop very close to the invalidation point, and it will be reasonable. That's the major task. Dealing with the butterfly, I can't exclude that market in general could create the new low. So this right wing of this butterfly could a bit shift the shape. For instance, it could be that way, that sort of action. So if market, for instance, shows slightly deeper low, but this low will still hold above this swing low, the shape of the wing could be just slightly different. For instance, that's of that kind, and market could start move, for instance, to the upside right from this area. That's also possible. That's why I'm not telling that this will happen definitely, but this is possible. Well, that's why dealing with the butterflies also suggests that you should take position as close to the invalidation point as possible, or if you will find some other reasons for taking the position that will let you to place some reasonable and tight stop. Well, but currently I do not want to take the short position, mostly because of that potential bullish dynamic pressure and free period rule. Well, but here I also do not want to take the long position currently, mostly by the geopolitical risks that now exist, because that's not the purely butterfly, the normal condition. That is the sort of the indecision of the market when the market waits some big events, and when you do not know what will happen. It's very it's mostly look like gambling when you're checking the position and trying to guess what event will be released and what will happen. Well, I suspect that, or in reality, the United States probably will strike the Syria by the rocket attack, but probably, and market probably knows that, because it's United States comes too far with the rhetoric that they have announced on the serious object. But what will happen after that? It's very difficult to say. Well, that's why that's current situation is very personal. Will you take the position in the current environment? Somebody likes to trade when the market really doom and gloom. Personally, I do not like such situations, and better to search other possibilities. Well, maybe if you will find, usually when such market enters in such turmoil, I prefer to find some short-term setups, some, for instance, butterflies, some patterns on the 15-minute chart, on the 30-minute chart that comes to the target fast within the 2-3 hours, and just trade them and close the position and sit on the heads. If you do not see any such objects for trading, such patterns, it's better, at least for me, it's better just do nothing. Do not trade, do not take any longer term positions on such markets, because this really could become very expensive trading. So that's a bit different subject to trading. It's not purely linked with potential patterns and technical situation on the markets. It's a bit money management and personal sentiment with the markets. That's why only you could answer would you like to trade in such environment or not. I just show the pictures and show you the patterns that I see now and what could happen in reality. Well, in general, the situation in the market is still very interesting, and let's see what will happen, because currently really big moves could come. I hope we will get some possibilities for trading in the nearest term.